your home didn't appraise. Oh, your stomach just drops. You're probably wondering if this deal is dead, if the buyer is going to walk away, or if you're going to lose thousands of dollars. Take a breath, because low appraisals happen more often than you think, especially in competitive markets when the price gets run up, and in most cases they get resolved. Today, I'm going to explain exactly what an appraisal gap is, what happens when your home doesn't appraise, and the 3 ways these situations are usually solved, and the one thing neither side can do without talking to the other side first. First, let's talk about what an appraisal actually is. An appraisal is an independent opinion of value completed by a licensed appraiser. Their job is to evaluate the property and compare it to similar homes that have recently sold. Notice I said recently sold, not currently listed, not under contract, sold. Because the lender who orders the appraisal, they want proof that the home is worth what they're lending against. Here's why that matters. If a buyer is purchasing a $500,000 home and putting down 10%, the lender is still loaning out $450,000. They're taking the biggest financial risk in the transaction, so they want an independent third party to confirm the value. The appraisal protects the lender, but it also protects the buyer by making sure they're not dramatically overpaying based solely on emotion. The contract price is what the buyer and seller agreed to. The appraised value is what the appraiser believes the home is worth based on comparable sales. Most of these times, these numbers match, but sometimes they don't. And when the appraised value comes in lower than the contract price, that's called an appraisal gap. So why do appraisals come in low? This is the area where a lot of people, buyers and sellers, get frustrated. The first thing sellers often say is, but we had 10 showings and 5 offers. How could it not be worth that number? And honestly, that's a fair question. The challenge is that appraisers are looking backwards. They're relying on closed sales that may be 30, 60, or 90 days old. Meanwhile, buyers are shopping in today's market. In a rapidly appreciating market, or if the home is amazing, buyers may be willing to pay more than what a recent sale supports. Sometimes the appraiser doesn't have a perfect comparable sale. Sometimes the home is unique. And sometimes the market moved faster than the data. And yes, occasionally appraisers and agents simply disagree about the value. A low appraisal doesn't automatically mean the home was overpriced. It simply means the appraiser's opinion of value came in below the agreed upon contract price. Let's make this simple. I have walked this road myself. So let's say your home goes under contract for $500,000 and the appraisal comes back at $480,000. Now we have a $20,000 appraisal gap. The lender is generally going to base the loan on the lower appraised value, not the contract price. So somebody has to figure out what happens to that $20,000 difference. That's where the negotiation begins. Option 1, lower the purchase price. This is the simplest option, and probably what your attorney is going to ask for. This means the seller agrees to reduce the purchase price to match the appraised value. So in our example, the price drops from $500,000 to $480,000. The buyer doesn't need additional cash, the financing works, and the transaction moves forward. But there's a downside, and it's obvious. The seller now receives $20,000 less than they expected. But sometimes that's preferable than putting the house back on the market and starting over again, especially if you had multiple offers that ran up the price the first time. Option 2, you split the difference. Option 2 is meeting somewhere in the middle. Instead of one side absorbing the entire gap, both parties share it. Maybe the seller reduces the price by $10,000 and the buyer brings an extra $10,000 cash to closing. Everybody gives a little. Nobody gets exactly what they want, and that's often what good negotiations look like. But the buyer has to have that money. It can't be added to their loan. This solution can work extremely well when both sides are motivated to get to the closing table. Option 3, the buyer pays the gap. Option 3 is that the buyer covers the difference. So using our example, the buyer agrees to bring the additional $20,000 in cash and proceeds at the original $500,000 purchase price. So this is especially common when the buyer, 1, has the money available, but if they included an appraisal gap waiver in their offer, they pretty much have to. An appraisal gap waiver is language that says if the property appraises below the purchase price, I agree to cover some or all of the difference. There might be an actual dollar amount there with my own funds. So this is not added to the loan. The buyers use these waivers all the time in a competitive multiple offer situation because it gives the sellers confidence that a low appraisal won't derail the transaction. But one thing buyers need to understand is that this money generally is in addition to their normal down payment and closing costs. So before offering an appraisal gap waiver, make sure you simply have the financial ability to follow through. Now, some lenders can be tricky about this in a good way. So if you have 20% down payment, but you have to bring extra money to the table to get the house, you could reduce your down payment to 15%. There's other ramifications like PMI, but it's not impossible. So can the appraisal be challenged? I will tell you, appraisers don't like to admit that they're wrong. So really, if you challenge it or you pull a Tidewater, if it's a VA loan, it's probably not going to happen. But if it's wrong, like it's missing a bedroom or the incorrect square footage, or there were updates they didn't consider, or it was missing the detached garage outside, we can ask them to reconsider it, but that doesn't mean the value will change. It does give the parties an opportunity to present additional information and to ask the appraiser to review it. But you have to understand, appraisers are not obligated to change their opinion because someone simply disagrees with it. But if strong supporting data exists, it's worth exploring. This has happened to my buyers before. The appraiser did not count the entire walkout basement in the appraisal. So we went back and they did reconsider, but at that point, my buyer had moved on. So here's what can't happen and what buyers and sellers misunderstand. A low appraisal does not automatically allow the seller to cancel the contract. Here's what I want you to remember. A low appraisal stings. It especially stings when it's like $2,000 or $3,000 or $5,000 under the purchase price. Oh, that's so irritating to me. But it doesn't mean it's a failed transaction. It's a negotiation. The seller cannot simply decide they're unhappy with the appraisal and relist the property for a higher price, especially in Illinois when we use attorneys. If there's an appraisal contingency in the contract, that contingency is generally there for the buyer's protection. We have options. We want to keep this deal together. It does not create an automatic escape hatch for the seller. So before anyone cancels anything, the parties need to communicate, and in Illinois, we use attorneys, so those attorneys are going to communicate and negotiate. Maybe the seller lowers the price. Maybe they split the difference. Maybe the buyer covers the gap. Maybe there's another creative solution. But one side doesn't simply get to declare the deal dead without addressing the issue first. I've seen homes appraised low, but we still successfully close because both sides stay calm, they communicate, we focus on solving the problem together instead of panicking. You still want to sell your house and the buyer still wants to buy your house. And if you're in a strong seller's market, a low appraisal might mean that buyers are moving faster than the comparable sales can keep up. So don't assume the deal is over. Most appraisal gaps have solutions. The key is understanding your options and working with professionals who have navigated these situations before. I'm Jamie Herring with the Herring Homes team of Coldwell Banker Realty. I'm a Chicago suburban realtor, and if you are buying or selling in Lake County, Cook County, Southern Wisconsin, McHenry County, or any of the surrounding suburbs, I will give you the guidance you need to make your next move.